This is Ralph Vince, and today we're going to talk about the volume bar rules indicator. This indicator uses volume as its sole input, and as a result, it's non-redundant to other price-based indicators you usually encounter in your analysis. Now, some people will contend that volume is not what it used to be. Today we have high-frequency trading. We have arbitrage programs. There's also the problems with holidays and days before and after a given holiday. I've been following this indicator since the early 1980s, and I can tell you, volume works today the way it always has. Now, there's a lot of rules to using this, and I've saved most of these rules in a PowerPoint presentation you can download from my website, www.ralphvince.com, and click on the Links tab. You can download the volume bar rules presentation and view it as a PowerPoint presentation. If you study that presentation, you'll get a much deeper understanding of this indicator. For now, TradeShark has this indicator packaged up so that you can see the basic highlights of the signals where they might occur on any given chart. So I'm going to go now, and I've downloaded Boeing 1 day for 3 months. I'm going to overlay volume bar rules on it, and I'm going to change the time period study on it. The default for this study is 13 bars, but I want to highlight it so we have fewer signals, so I'm going to put that up to 34 bars. I just pick a Fibonacci number, but again, this is not optimized. You can experiment with it and find out what works best for you. So I put 34 bars down, and I'm going to add that to this chart. Here you can see, using TradeShark, where a signal occurs, it's highlighted as a red bar. Typically, these bars indicate a turn in very short-term direction. Sometimes these turn out to be longer term, but all long terms start out as short terms. So let's take a look at Boeing here. We can see on this bar, the first red bar occurring in 10/15 of last year, 2014, telling us to be looking for a turn to the upside. The recent bars have been to the downside. We're going to look, and there it is. Usually, these signals are anywhere from 1 to 2 bars early. It's one of the nice things about this non-redundant indicator. A few days later, after a sharp drop down, we have another signal to buy. And again, you have to determine what the very short-term trend was. And here you can see the very short-term trend, whether it's respect to 1 bar, 2 bars, or even 3 bars back, has been to the downside. So you'd be looking to buy. In fact, when the close is very near the low of a day and you get a signal to buy, you're looking to buy just below that day's low. Similarly, if it closes very much near the high and you're looking to sell, you'd be looking to sell just near that day's high. And you can see other signals that occur in here. Sometimes they're ambiguous depending on the market characteristics at the time. When they cluster together, signals tend to be stronger. When they cluster together, and it's after a precipitous drop like you see here, these tend to be very reliable signals. Here we have a low and close very near each other on a high volume day bar, telling us to be a buyer tomorrow at a low below this, and then we have another confirming signal the day after. If I go and look at American Express, for instance, now, the same way, daily bars, 34 period study. Here I have a clustering of bars near this low. So on the first bar, I'm looking to be a buyer. Later on, right near the top, I'm getting sell signals, and I had nothing in between on that. Like any indicator, sometimes these signals fail. Here we see on 11/26/2014, we have a sell signal in American Express. The next day, however, was a sharp close up. We know very early on when these signals fail. Now finally, to the right on this daily chart is a very strong type of signal that you'll see with these volume bar patterns. Often, when you get a signal one direction or the other, and here on 12/19 we get a sell in American Express, and it just rather flounders upwards for a few more bars where we don't have a signal, then we get more sell signals. When we have a sell signal, a few bars without it, where the market rather flounders and goes nowhere or even a little bit further, and then another signal, this is a very, very strong indication. I call these bullhorns and bear horns. And you can read about them in the PowerPoint. Now these volume bar rules work on any chart where you have volume. We've only been looking at them on daily bars here. But let's return to American Express and say, oh, I want to look at this on, weekly bars for the last year. Well, let's see how that looks. And here you have your signals. Pretty nice, generally. This is a wonderful non-redundant indicator that has stood the test of time. I'm Ralph Vince. These are volume bar rules, and they're available exclusively on TradeShark.